Hey, what's up, my friend? So, welcome back to this month's market analysis. For those of you who have been watching these videos regularly, you know what I do is that each month I post my price action analysis of the markets where I think trading opportunities are right now and how you can take advantage of it. But first, a quick disclaimer, right? Whatever I share over here is purely for educational purposes. Whether you make money, whether you lose money, it's your responsibility. Do you agree? If you agree, then continue watching. So, first thing first, right? The first market that I want to share with you over here is Aussie against the Swiss franc. So how I'll break this down is that first and foremost, let's look at the big picture perspective. Okay, so weekly time frame, you can see that Aussie Swiss franc it's in a downtrend. So market making a series of lower highs and lower lows. Okay, you can see very obvious. So basic technical analysis would tell you that in the long run, this market has been consistently heading lower over time. But here is where it might catch some of you off guard because you look at this chart. But Rayner, look at this, Rayner. This is a strong, bullish move from the buyers, right? Do you want to be selling at this point in time? And yes, I agree, right, that this over here is somewhat of a sign of strength from the buyers. And if you just look at this, right, I would say this is a possible pullback against this long-term downtrend. Okay, and this could possibly be the pullback. So now the question is, do I buy or do I sell? Because if I buy, I'm against the long-term downtrend. If I sell, this pullback, right, might continue higher and still stop me out of my trade. So what do I do? Okay, so the answer to this is that yes, you can both be a buyer and a seller. It depends on your own time frame that you're trading. So for example, let's say you're trading off the 4-hour time frame. Okay, just zoom out. You can see that overall this time frame is bullish on this 4-hour time frame. So yeah, if you are bullish, right, and you want to buy, you can look for buying opportunities at this area of support. Maybe the price could hit down lower, do a false break, close back above support, and hey, that's a valid setup to go long and possible targets at this area of resistance here. Okay, now what about selling opportunities, right? So if you look at selling opportunities, let's say on the 8-hour time frame, all right, or even the daily time frame, this is where things get a little bit tricky because you don't want to be selling, right, as this upward trend line and this area of support, they are still intact. Right, this is where potential buying pressure could step in. Right? You don't want to sell in front of this area on your chart. But even though you know that longer term trend is towards the downside. So how do you kind of like reconcile this conflicting information? So this is where it pays to be patient. Okay, it pays to be patient. So what I'm looking for, right, if I'm looking to short this market, is that the market must show me signs of crack, signs of weakness that sellers are stepping in. And what I'll be looking for is for this area here to break down. So the market must break and close below this area of support. When that happens, it tells me that hey, now the sellers are coming back in, right, to push the price lower and hopefully, right, to have the long-term downtrend continue lower. So when that happens, when this area breaks down, then I'll look for selling opportunity. And this can be something as simple as, for example, let's say, nothing too complicated. Let's say price breaks down, okay, then it retests back previous support that could turn resistance. Over here, I could look for price rejection, right, to short this market. Could be something as simple as a shooting star, bearish engulfing pattern like this. Goes up, then suddenly reverse and close near the lows of the day. I'll be looking to sell on the next candle open. Stop loss can go 1 ATR above this highs. Possible targets at this swing low. And if you're a bit more more gung-ho, right, you can even look to have possible targets at this major swing low over here. Okay, so I hope this makes sense, right? So how you want to buy and how you want to sell is a matter of time frame and a matter of patience, right? Especially if you want to short this market. You want the price to show you weakness first before you look for selling opportunities. Okay, moving on. Next one. So 5-year Treasury note future. So we spoke about this quite a number of times, I think maybe even in last month's market analysis. So this is quite straightforward. If you look at this market, the daily time frame market is in an uptrend, right? Just zoom out. Okay, you can see that this is trading near multi-year highs. Okay, maybe even at all-time highs, I'm not sure. Yeah, so you can see that this market is bullish. There's nothing to be bearish about this market. So if you go down to let's say the daily time frame, okay, what I'm looking for is to buy the breakout. As you know, I don't like to buy breakout when the market makes a huge parabolic move. Instead, what I want to see is a build-up before the breakout. So in this case, this is the build-up that's being formed on top of this area of resistance. So this to me is a sign of strength. It tells me that buyers are willing to buy in front of resistance. They are coming in and willing to buy at these higher prices. I do not know why. Maybe there's some inside information, right, that the Fed is going to do something there. They're just willing to buy at these higher prices. That's all I can see objectively at this point in time. So again, I'm not going to fight them, right? The trend is up. build up is being formed. I have a logical place to set my stop loss. I can manage my risk. This is a trade that I want to take. Okay, so how do you trade this? Again, nothing too complex, no fancy crossovers, indicators whatsoever. The price. So what I'm looking to do is to place a buy stop order above this highs. Okay, so if the price trades above it, I'm long. So where do I set my stop loss? Okay, since I see that this is the lows of the build up, I can simply set my stops distance below it, 1 ATR somewhere about here. Okay, so I have a logical place to set my stop loss as well. So this is the potential breakout, right, that could occur on 5-year Treasury note futures. Of course, right, this is not the only game plan, right? If you go down to the 8-hour time frame, you might be able, right, to enter the breakout before the breakout. So let me explain. So on the 8-hour time frame, you can see this key level here, okay, where the lows of this build up is actually this area of support over here. So what could possibly happen is that the market takes a swing down lower and rate the stops right below this area of support. Then it reverses up and close back above support. Okay, so this way, this is what I call a false break down below these lows. I can go long on the next candle open. My stops again can just go 1 ATR below this low somewhere here. And as for trade management targets, right? So my suggestion is, you can take half at this area of resistance here, right? Take half of your profits. Then you have the remaining half. And this is where you can, have the option of, seeing, right, if the market can break above this area of resistance. Because if it does, then at least you have half position left, right, to ride the subsequent trend that could occur. So you have, options over here. Of course, if you don't want to take half your position, you want to ride the full position if the price breaks out, right, that's up to you as well. But bear in mind, what could also happen is that the market, from here, it reverses down, gives you a false break setup. You go long next candle open, it goes up and smash down lower. So if you don't take anything along the way, you could see a winner become a loser. So there's really no right or wrong to this. It really depends on, your goals, your objectives, and how comfortable you are in your own trade management. Okay, so this is just a food for thought, right? Food for thought. Making me hungry as well now. So, okay, moving on. Next one. NASDAQ. Okay, so this market, again, amazing, right? Just breaking out to all-time highs. The technology stocks, right, is just insane. So what should we be doing right now? Buying or selling? Based on this, based on this daily chart that you're seeing over here. Did you say selling? That's wrong, right? You should be buying. You should look for buying opportunities. Okay, yes, I know market is so bullish. Man, Rayner, you can't go any higher, right? The prices is, to the moon. You can't go any higher. But here's the thing, right? At this point, if you just look at this, at this point, yeah, it can't go any higher. Guess what? Continue goes up, retrace, goes up and higher. So if you keep having the mindset of you can't go any higher, it has to reverse, it has to come down. Yes, one day you might be right. But before that day comes, your account might be gone already. So why not just trade what you see, not what you think? Okay, so bullish on this, that's for me. So the question is, where do I enter the trade? So looking at the daily time frame, NASDAQ. Okay, so let's pull out the 20 MA and see where is the area of value. So you can see that this market has tested the 20 MA number of times, all right? Once, twice, thrice, 4 times. So needless to say, right, to me, the area of value is around the 10,200 area, somewhere about here, where previous resistance could become support, and this has the confluence of the 20 MA as well. So again, very simple. You can use the daily time frame or even the 8-hour time frame to time your entry. What I'll be looking for is, again, for the price to retest this previous area resistance that could act as support somewhere here. Okay, price hit down lower, zoom, right, reverse up higher, close back above support. Looking to buy, stop loss 1 ATR below these lows. Possible target could be at this swing high over here, looking to take profits. Okay, very simple stuff, nothing too complicated again. Okay, and one last thing, shall we? New Zealand Canadian. Okay, so this one again, let's look at the big picture. All right, daily time frame, zoom out, you can see that. Why not just a weekly? You can see that this market has broke below this downward trend line. Right, since 2016 all the way down, it broke above it. Also, it also broke above this key area of resistance. So if you look at the daily time frame, I am bullish on this. Right now, the question is, where do I buy? So yes, you can be bullish on the market, but it doesn't mean that it's the right time to buy. Because for example, if you look at this market right now, if you buy on this right now market order, where do you set your stop loss? Where is a logical place to set your stop loss? From the looks of things, I would say this level, the price has to go at least below this level, below this area of resistance, right? Because this is the nearest price structure. right? So let's say a distance below it, somewhere about here. From here to here, your stop loss is pretty wide. So what other options do we have? Why not be patient? Why not let the market come to you? So what I'm looking for instead now is for the market to come to me. So on the 8-hour time frame, again, this is the 88-cent level where I would expect, right, previous resistance that could act as support. Let the market come to you, retrace back towards this area, right? Then it can give you a bullish confirmation, like a bullish engulfing pattern, close strongly back above this area of support. Now, right, you have this price structure that you can lean against, which is much tighter. So let's say your stop loss is again at this level. The distance of your stop loss is now from here to here. So much tighter, so much smaller, right? Better risk to reward on your trade. Okay, so yeah, so that's how, you know, I'll be looking to trade this. Again, possible targets is again at this swing high. You can look to, you know, book some of your profits at this swing high, and then, you know, to see if the price can take this level out and then continue higher from there. Okay, so this is New Zealand Canadian. And just one last thing before we conclude. Okay, so Aussie Canadian. Okay, so just a lesson to share with you over here. So this is something that I shared with a Pro Traders Edge member. So if you're watching this, you might not be a member, but still I want to share with you this important lesson anyway. So Aussie Canadian, right, is a market that yeah, I've been watching for a while. Might have even covered in last month's video. Can't remember that. So at this point, right, I want to share with you is that, you know, yes, market broke out of resistance. Market is bullish, right? You can see over here, market is bullish. Okay, and here's the thing. Many traders, right, are looking to chase this market. All right, and some smarter ones, they will know, man, Rayner, I shouldn't be chasing the market. You just said to let the price come to you. So what I'm going to do is I'm going to wait at this previous area of resistance, where previous resistance could become support. And that's a fair argument. In fact, that's what I just shared with you earlier on New Zealand Canadian. And what happened is that the market somehow seems to know what you're thinking. In fact, it knows what you're thinking and it starts to consolidate instead. And it doesn't retest the level that you're looking at, which is at this area over here. Now, so what now? Okay, yes, you can wait at that level forever, and if it doesn't come, you'll miss the subsequent move if the price breaks out higher. So what can you do? Okay, so this is where, you know, you gotta have to have multiple plan of attack. You can't just be a one-trick pony. Yes, you can, but you're kind of limiting your trading potential, right? If you're a one-trick pony. So what you want to do is to ask yourself, right, in what other ways could possible trading setups unfold itself? So let me share with you two over here. Right, the first one is as the market consolidates over here, all right, it forms a consolidation. And in fact, if you pull out the 20 MA, the price actually touched the lows of the 20 MA. So this again is an added confluence. So what you can do is you can go down to a lower time frame like the 4-hour time frame and look for a false break setup. And this is what happened, right? On the 4-hour time frame, you can see that over here, this is the lows of the build up you've seen earlier. There's a false break over here where the price gapped down lower, taking out these lows and then closing back near the highs of the candle. This is what I call a false break setup. Again, you can go long on the next candle open. Stop loss 1 ATR below these lows. Possible targets. First target could either be here or even here. Okay, and after which you have the remaining half of your position to ride the move up higher. Okay, so this you can see, right, how this market can unfold itself. Originally, you're waiting for the price to retest this previous resistance that could act as support. It didn't. So what now? What's your next game plan? Right, so you want to have multiple plan of attack. Now, let's say you miss this move over here. So what now? So again, right, not all hope is not lost, because there's another trend continuation trade that you can look to trade, right? So this is like kind of like a bull flag. Okay, when the price breaks above these highs, you can look to go long. Stop loss now will be 1 ATR below these lows. So clearly in this case, your stop loss is much wider, but still that's another valid plan of attack. So the key lesson, the key message that I'm sharing over here is that, you know, for those of you who are new to trading, yes, you will be a one-trick pony. But as you progress as a trader, as you've been trading for, you know, months to years, you want to develop multiple plan of attack, because the market won't necessarily always behave in a way that you wish it would be. So you need to, you know, have different plans. You know, what if this doesn't happen and that happens? What will you do, right? So have a trading plan, and, you know, anticipate, right, what the possibilities that the market could do, and you have different setups, right, to trade different market scenarios. Make sense? Sounds good? Now, if you've enjoyed the market analysis, right, then I want to welcome you to join Pro Traders Edge, right? This is my premium membership, right, where you will get such market analysis every single week, right? I usually publish this type of videos on a weekend to share with you my my insights of the market, the trading opportunities I'm looking at, the trades I took, and much more. So that's not all, right? Because as a Pro Traders Edge member, you get many benefits that come along with it. So for example, you have access to the backtest research lab. So this is a lab, right, where I pretty much backtest the financial markets to tell you what works and what don't in the financial markets. So we have different stuff going on. We have, things that talk about stock markets, quantitative trading, and much more. So all this over here in the backtest research lab, and I regularly, add in new lessons, new findings that I have in the financial markets. Then also we have the weekly trade alerts. This is basically, right, the video that you've seen earlier, but it's on a weekly basis. So every single week I publish such videos, right? So you can see my analysis, my thought process, the trades I took, and you can, shorten your learning curve and quickly, level up your trading. So you can see that, every week we publish a new video on the markets. We have a premium trading strategy guides. This is for you, right? Especially if you enjoy reading my blog posts and you want a PDF version of it. So every month we upload new PDF trading strategy guides. It's free for you to download. You can just click on it, right, and you will be brought to a PDF link, a PDF page to download it. We have a exclusive training webinars for you to help you, level up your trading, learn new trading strategies and techniques. Okay, these are exclusive webinars that you will not find elsewhere. Then we have, trading books and investing books that I recommend. Trading checklist, right? So before you put on a trade, you can, download this checklist to review it, right? To make sure that, you're on the right side, on the right page, right? And not doing anything funny or silly, right? We have the proprietary trading indicators vault. This is for MT4 users. You can download all these indicators to, help you with your own trading, like, the MACD, MT4, there's some issue with it. We have fixed it over here. We have the Donchen channel, a news reporter that alerts to you, potential, important news that's coming up, and much more. It's all over here in the indicator vault. And also we have the simple mean reversion trading strategy that you'll learn, right, to trade the market. So this is a very simple strategy for you to get started, especially if you do not know which strategy to go with. Start with this simple mean reversion trading strategy because it is back tested, right, to identify first and foremost which markets tend to mean revert, which markets have a mean reverting characteristics, right? Then I explained to you, right, the setup to trade this type of mean reverting markets, right? So you really have the odds in your favor, right? Applying the right trading setup in the right type of market condition. Okay, so this is a mean reverting trading strategy that anyone can learn, right? Even if you have no trading experience. So this is what you'll get, right, as a Pro Traders Edge member, right? New content are updated regularly for the backtest research lab, weekly trade alerts, premium strategy guides, and much more, right? So I'll put the link below so you can check out Pro Traders Edge. And with that said, right, I hope you've enjoyed this video, and I'll talk to you soon.